So we want to get into what happened. Why is this such a big deal? Here to help us out is former Torchlight Energy CEO John Brda, whose company was taken over, if you will, or at least the symbol was by Meta Metals. And John, you and I spoke earlier on the phone. It's a tough one to hash out in just 3.5, 4 minutes. But let's get to the crux of the issue here. Explain what happened for the audience who may not know what's going on.
Sure. Well, thank you for giving. Back in 2021, we concluded a merger with, and part of the business arrangement for that transaction, we were to issue a Series A preferred share that was to be non-tradable for all of our shareholders of record on the dividend date, on the record date. And we closed that transaction and issued 165 million shares to those shareholders of record. And we went about closing the transaction, and Meta changed their ticker symbol to MMAT, and now they're on the NASDAQ and going about their business. Fast forward about 4 months, and after kind of doing some investigation on whether or not the entire short position were closed out, we found out that that truly didn't happen. And then two market makers got together, went to FINRA, went to OTC Markets, and started trading the Series A preferred as MMTLP, or Meta Materials Preferred. And they did so with fraudulent information on OTC Markets. And when I found out about it personally, because they were using my information, and they went ahead and allowed it, and decided at that point they were going to do nothing. And so that's
John. This was not the company had nothing to do with this. Two market said, "Hey, we want this to trade." FINRA said, "Okay, we'll trade." Talk about the big shares of the shorting that goes on and how this happens over and over again. Shorting that for many people, it's never, it's sort of a way that these firms have been able to abuse small companies, smaller listed companies.
Yes, 100%. Thanks for bringing that up. So smaller companies like Torchlight and other companies that are out there in the small cap space that need to consistently raise capital to further their business plans are the targets of basically hedge funds and shorters that short ahead of a potential offering, or short just to create pressure in the market, so that when a company has to go to the market to raise money, they're getting their stock at a cheaper price. And the only way for a synthetic or a naked short to cover is if the company actually issues real shares, because otherwise they're just sitting in a naked short that they haven't borrowed, and they have not done everything the proper way. So that's very pervasive in small cap stocks, right, and companies in particular that need to raise capital throughout their lifespan.
I got less than 30 seconds. People on Twitter saying, like, other firms are now saying they won't allow any trading in the stock. I mean, I'm not sure what the goal was with these two firms. I think Canaccord and another. What's going to happen from here, John?
We really don't know what's going to happen from here. FINRA halted the stock on the last 2 trading days, when the only trading that could have gone on was buy to cover. And quite frankly, if there was a real problem, if there was no problem with the short position, according to OTC Markets, there's only 6.5 million shares short. Well, if that's the problem, they could have worked that out in 2 days.
Yeah.
But they decided not to do that. They halted the stock, and now, as you know, it's up for us to continue the pressure on that.
All right, we'll keep the pressure going and keep us informed. I wish we had more time, and it is complicated, but I'm glad you came on to share this part of the story. Thanks, John.
Thanks, Charles, for your time.
So from this real bitter situation in the stock market to the sort of bitter aftertaste in the midterm elections,